Welcome to Hitting Home with Mike Montague and Arif Khan, and this is the show about what everybody likes to talk about, real estate. And Arif, how was your holidays?
Well, Happy New Year to you. My holidays were fantastic. They were exactly what I hoped for.
Excellent.
They were low stress, low key, not a lot of competition of who gave which present to whom and who did a better job. It was about family time, so it was good. But I will tell you, it was the shortest holiday I've had in a long time. Something that we're going to get into, obviously, with people have been talking about the new mortgage rule changes coming into effect January 1st. Obviously, what ends up happening is you get a rush of sort of last-minute people wanting to ensure that they qualified. So we were back in the office Boxing Day. The sign wasn't lit up, but we were doing a lot of work to make sure that we were helping our clients out before New Year's.
Excellent.
Yeah.
That's
How about
good.
yourself?
Had a great time, and again, family all around here in Ontario, and then Sherry and I took off for Charlottetown, where her mom and dad live. And I got to say, as great as technology is, it hasn't alleviated the delay times at the airport. So lots of time to listen to podcasts and listen to all the news media wrap-ups for 2017, and I got to say, all of them, top 3, top 5, top 10 stories of the year, all of them have, guess what, as one of the top stories.
Real estate and finance.
Let's
talk about some of that, though.
Conversation.
Why don't we do a bit of a wrap-up for the year? Just take a couple minutes and see what happened in the last year.
Yeah, for sure. All right. One of the things I would say we should talk about is just the way the market moved. We came into January, February. I read a statistic where in the GTA, January housing prices went up $100,000 average price between January and February. It was crazy for that first few months of the year, and then the government started to intervene, putting their plans in place for their fair housing plan. Interest rates started to creep up a little bit, and the market started to level off, and it's a leveling off that I think we need. I may not agree with all the interventions that have taken place. I think that the market should control itself, and we've talked about that, and we'll talk about that more.
Yeah. Well, listen, society, we've been around for thousands of years, and the simple basic facts are supply and demand are the root laws that have always stood the test of time, will continue to stand the test of time.
They do.
One of the things that has changed, though, is where people are getting their information from, where it used to be the headline news, the television anchors, or the newspapers. I think, obviously, social media has come into place, and I think that
for better or worse.
For better or for worse, well, absolutely. Remember, you always hear people who are doing their self-diagnosis for health online. That's not always the greatest thing either, and I would offer the same caution when it comes to finances. But the truth of the matter is that, you got a lot of pundits. Watch your headlines. Be careful of what those headlines say, because one minute the headlines are saying, doom and gloom and everything is going to be horrible and the sky's going to fall, and the next thing you know, a few weeks later, it's, oh, well, like I always said, things are going to be just fine, and what people predicted was going to be sort of the biggest disaster that ever happened and actually didn't pan out.
It happens. And that's sensationalism, which is typical of news media. Get the headline, paint the worst case scenario, and oftentimes things unfold and, well, we survived that. And here we are, it's January 2018. Looking forward, I'm quite confident that it's going to be a great year. The demand for housing continues, will always be there. Prices have leveled off. In fact, they kind of hit a peak by early 2017 and kind of dropped to a more moderate level, and again have kind of found their own level where they need to be.
Well, listen, I mean, I would say to you again, watch the headlines, and if there's one message that I want to say through this show, throughout, is we're going to be careful. I think we're going to want to be that voice of reason, hopefully that people will see us that way.
I don't want to be taking those headlines and just seeing if we can take them to a whole other level.
Exactly.
I mean, rather, let's look at the facts behind
you said average price $100,000 increase. Some people said a 40% increase year over year. Okay, for that brief moment. When there was that uncertainty,
you can't define the year by that one segment, and who knows, that may have been a month where suddenly there was an influx of sales of higher end homes early in the year.
Yeah, the next headline though said, oh, prices have dropped 25%.
Yes.
Well, no, they haven't. Year over year, what happened?
Yes.
You still saw we were on average about 15, 17% somewhere in there.
Yes.
And I think that's that leveling off, right? So, yeah, some people got caught in the hysteria, but the supply and demand laws and common sense prevailed, and people did back off. And
Yes.
what else do we see?
Yeah, even if you think you did get caught, if you bought at that high, it's not like
You didn't lose the money.
No, you didn't.
You're just going to wait a little longer
You're
for it to
going to
catch
wait,
up.
and prices are going to surpass what
Absolutely.
you paid, if not this year, next year, the year after. I'm hopeful we see more of a moderation of price increases. I think it's healthier for everybody. I know if you're an investor, the higher they go, the better. But it is a house of cards. You can't have 20% increases every year and hope that will continue. And the other side of that is, now you price the average person out of the market. I mean, in the GTA, I heard the quote was well said in one of these reflections of the past year. The GTA hit a point where the average person now, they have to leave Toronto in order to own a home. And that's going to impact on our market here in Simcoe County and Barrie over the next while. We're going to see more and more people who, for not just as a choice, a lifestyle choice, but because they have no choice, if they want to own a home, are going to have to go an hour outside of Toronto. They may have to commute to work, but if they want to own a home and raise a family in a home that they own, they're going to Hamilton, Oshawa, or Barrie, somewhere within that 1 hour, hour and a half commute. And I think that's the new normal now going forward. And that will continue to...
Is that foreign though? Is that unique just to Toronto, or is that something that you think you see in any major metropolitan area,
anywhere
whether
where
it's in
you have
Europe
a
or
larger
in Canada?
if you have a large metropolitan area with a large population, where the demand for housing in and of itself is high, causing people to have to move, but coupled with that, the prices are out of line with what the average person can bear financially. I think you're going to see that. So it's probably, I know for sure it's happening in Vancouver and other municipalities. I'm sure it's happening as well.
So when we come back from the break, though, I think one thing that we should explore is it's not just the housing prices.
No.
It certainly wasn't. I mean, the data says it. There was a lot of speculation, and the data's presented itself in the recap of the year that it wasn't the foreign buyers who made this massive impact.
No.
They were like less than 5% of the entire
in the overall
influence.
equation, they're a small fraction.
But now
of
you've
that.
got the government wanting to temper housing prices, and then at the same time you got them who are doing the rent controls, and you got the financial side, the regulators who are saying, no, we're going to put stress tests in place. And those things as well that we should talk about are also going to make it theoretically a little bit more challenging to qualify. And let's talk about what impact that's having and maybe why that's happening.
And in all likelihood, as we talk about it, what we're going to learn is those impacts are far less detrimental as the media is making them out to be.
Again, that's our key. Our key is to provide a voice of reason, watch the headlines, be critical of the headlines, use your common sense when it comes to the headlines. Headlines are there to sell a story, they're there to create a talking point. But if anybody had the crystal ball, they wouldn't be writing headlines. They'd be cashing in on those, on that speculation and being the greatest sort of 1-900 phone number to get the best advice from. And they're not. I mean, we find out after the fact that, again, speculation is what people do. And it's up to you and me to filter that and apply it to our own personal life circumstance and make the best decision. So,
and when we come back,
when we come back, we'll dig into that
in
deeper.
calm and soothing tones, we will speak more on this.
Absolutely. And welcome back to Hitting Home with Mike Montague and Arif Khan. Calm and soothing tones, I believe.
Calm and soothing tones, yes.
Absolutely, and really that's what we're here about. We are your voice of reason. Hopefully that's how you see us. We take what everybody's talking about and we try to apply some rationale to it. And really 2018, as you said, Mike, I think it's going to be a very optimistic year. It's the year for reason to be think positively, a year that we've been given a lot to think about over the last year. There was some turmoil or lack of consistency, but I think it's given us cause to really sit and analyze where we are. And if we can do something for our friends, for our clients, for our viewers, it's help think things through. And I mentioned to you before we went to break, not only is it the price points that people are finding themselves potentially priced out of the marketplace, but also the regulators are coming in and saying, the term that you would have heard in the last few months of the year was the increased stress test.
Yes. Elaborate a little on that for those who don't understand completely, because
Sure.
it's a term many have heard if you're listening to the news, but not all of us understand completely what. Now, there's been 2 stress tests put in place. The first one was put in place for those who would have to have an insured mortgage, putting less than 20% down, or
Correct.
25% down?
Less than 20.
20% down. And just now in January, they're bringing in one for those who, the remainder of people who do have the 20% to put down in a house, but they also have to qualify under the stress test. You
Right.
know a few more of the numerical details on that, so.
Well, I think if I'm going to offer you one thing, I think our producer Joe will always ensure that we have a disclaimer somewhere in there that says the views and opinion as expressed on the show are ours, and it's really good information or good advice for our viewers to make sure that they pick up the phone, make an appointment with their licensed mortgage professional.
Well,
That's
ours should not be the first and last voice you hear on, make a decision on.
no,
And-
but hopefully we
and
give people a reason to want
that's
to pick
good,
up the phone.
That's good advice for
start talking.
anybody making an investment, be it a car, be it a house, be it anything. Talk to as many professionals as possible in and around your decision that you're making, and get all the best information you can.
Absolutely. Ultimately, though, our goal is to give you some things to think about, things to talk about with the people who you trust most as your advisors. But to answer your
I don't
question,
know, trust-wise though, the beard here you got going, meant to bring that up there. You grew that over the holidays? That would take me 6 months to grow that.
well, listen, I kept on forgetting the balaclava for going out and plowing and shoveling the driveway. So
Okay.
this is the built-in balaclava.
This is for warmth. Okay.
This is for warmth
All right.
purposes only. But
Had to get it out.
yeah, I know. I saw you looking at it, and just, yeah, I know. I know you're not used to it. It's okay.
Yeah.
It's okay. The wife's happy with it, though.
Excellent. That's all that matters.
With regard to that stress test, though, speaking of stress, with regards to the stress test, I think one of the things that, and I've got to give the government credit where credit is due. What they're doing is they're saying, listen, we're seeing household debt at, even though it's mild, increasingly higher levels in comparison to income. All right.
Historically, though, it's probably as high as it's ever been.
I think that's the point. And whether you said it earlier, whether or not I agree with the way things have been implemented or rolled out, I actually don't. Okay, I don't. But if I'm going to say, well, listen, this is what we're dealing with, why, and how can I turn this into my advantage? The stress test is designed to say rates could go up. Now, we have historically low rates of default, foreclosure. On average, the vast majority of people don't lose their home. Okay, but the government is concerned that we're spending more, putting more on credit, carrying more debt, and I think it's a way of gently forcing people to have a second look and saying, if I really want a house, and I want to make sure that not only do I get into the house, but I'm able to stay in the house, where the rates could change if you're on a variable rate mortgage, or at the end of 3 years or 5 years on your fixed rate mortgage, when you come up for renewal and the rates are a little bit higher, can you stay? Can you stay comfortably?
Yes.
Or what changes do you have to make? So really what's happening is they're saying now it's the greater of that Bank of Canada rate. So it doesn't matter what your contract rate is. You might get an offer of 3.2% for 5 years. You might get a prime minus 40 basis points, or so call it, whatever it may be, a 2.8% mortgage. You might get that as a contract offer.
Yeah.
But the requirement will be for you and me as borrowers, as homeowners, to pass a stress test that is the greater of the Bank of Canada rate, which is around just under 5%, 4.94%, or your contract rate plus 2%. And the point of it is they're just saying, this is your contract rate, you got it, it's yours for the next 1, 2, 3, 5 years.
You're not paying at that rate.
You're not
but
going to pay that
qualifying
higher
at
rate,
that
but you're going to qualify at it.
And-
Now, the other side that I've always questioned is, and I'm going to keep hammering this one home, is if they're really that worried about household spending, well, then why aren't they going after how easy it is to obtain high interest credit card debt, or how easy it is for credit card companies to up your rate, up your limit? Because that's where people are getting themselves in trouble. They're sitting with 20% credit cards, or the don't pay a cent event that they forgot to pay the cent on, and it's now 30% after a year, and then they're refinancing and consolidating all their debt into their home and drawing equity out of their home And the term that's been used this year a lot is using your home as an ATM.
Mm-hmm.
So I think what these stress tests are doing is actually forcing people to be more conscious and conscientious of their household spending habits.
And I think if you look to the Bank of Canada, I think they're wise enough to know that, upping rates by 3, 5, 8%, if you look back when our parents' generation was buying homes, would be all out financial suicide for our economy to do that. If you look to when interest rates were 10, 12, 15%, you hear the stories, 60s, 70s, when that was taking place. At that same time, the price of a house was, $20,000, $30,000 too. So increasing them by that amount was less impactful than it would be if we saw a sudden jump to 5 or 8% now, when your mortgage may be $500,000. So I don't expect, and again, it's only my own opinion here, but I don't expect we're going to see interest rates jump by any astronomical. They'll test them. They'll put them up a half a point here or there. If they start to see negative results, I think they'll rein them in again. And we have gone up and down in response to the economy, over the last 10, 15 years, 20 years. But it's always been within a percentage point or two. So I believe that will continue, but I don't think anybody should make a decision just based on that, thinking, well, interest rates can never go up. If they do go up to 5% within the next 5 years, you want to know that you can cover yourself when you renew.
Absolutely.
And that's a good thing. As for household debt on credit cards, you're not the first to ask that question, but I've yet to hear a clear response coming from the higher ups.
So my cynical side, lobbyists.
Yes, well,
lobbyists,
that's it.
right?
There's influence.
And they're differently regulated industries. When we come back from the break, though, what I really want to do is I want to talk about differences in housing types and the increase in applications that we've got, right?
Yeah.
So how are we going to address supply and demand?
Within the city and the county, yes.
I want to talk about the different types of lenders out there, because if there's one thing that our viewers have to take away from this meeting is these stress tests that we talked about and these new regulations that we talked about doesn't apply to all banks, and I want to touch on that when we come back. And I also want to talk about just a couple articles that we have that I was reading, that different people, how they're interpreting these rule changes and how they're going to impact the average homeowner or prospective homeowner. So when we come back from the break, we'll pick that up.
Welcome back to Hitting Home. I'm Mike, I'm here with Arif, and we're talking about real estate. A little bit of a reflection on 2017 and a look forward to 2018. And again, as I said earlier, I'm feeling optimistic and quite confident in the way things are going. We just heard the Mayor, Jeff Lehman, do a wrap-up in the last week or two, talking about the past year. And one of the things I found quite interesting that he talked about was Barrie having the lowest unemployment rates nationally for the whole country.
Absolutely.
He also clarified for us, a lot of people, when you do tell them our unemployment rates are low, go, yeah, but they're all fast food service industry
Or they could
jobs.
be seasonal
Employment.
Christmas jobs.
It's just not the case. We've had a lot of new industry make applications to come to Barrie, a lot of new industry that is opening their doors as we speak here in Barrie. And maybe you can elaborate on that a bit, being behind the table at City Hall Monday nights. Tell us what's happening. And
Absolutely. I mean, I think you nailed it right there. There is a lot of confidence in our area, certainly in some sectors that are in high demand. The colleges can't produce people fast enough. The City of Barrie participated collaboratively with the college and a variety of employers not so long ago, earlier in the year, and there were more jobs available than there were applicants for those jobs, and that is the consistent
that's the kind of
theme
problem
that
you
we're
want
hearing.
to have as a municipality.
And they're not just low-paying jobs.
Yes.
And listen, you're always going to see people on social media who are going to speculate one way or another and want to find out why the stats are not what they really are. The stats are what they are. There are employers out there who are willing to pay if there's obviously a qualified candidate for that position. It could be CNC, machining, any of the trades. It could be in high tech. It could be in medical technology.
Yeah.
We have a lot of jobs. Drive along Mapleview, you'll see hundreds of thousands of square feet of development being built,
Yes.
industrial and commercial development being built, some of it on speculation, on spec, that they're going to fill it. We've got a lot of applications, and the city's economic development team is very busy with not only bringing new employers into Barrie, but working with existing Barrie employers who are looking to expand.
Yeah.
So you're absolutely right.
Yeah. And in addition to that is residential development proposals are on the increase, at least to my eye, tuning in Monday night watching City Council, which comes on now right after our show here. Am I right in that assumption that
Yeah.
we're seeing an increase in development proposals for residential and multi-unit residential particularly?
Sure. So what we saw really was a period where we had that, I don't want to call it a freeze, but we had this, what was formerly called as the annexation lands or the secondary plan, these lands that are sort of south of Mapleview. There was a bit of a development freeze. We ran out of land inside the city of Barrie, the
Yes.
proper boundaries of the city of Barrie as we knew them, for new development. So what we saw was an increase in applications for maybe sort of
Building up instead of building out.
building up and out, or maybe doing some small land assemblies and converting some single family homes into multi-residential, whether it's townhomes or condominiumized homes, et cetera. Yes, we did see that. But as well, that's part of that pressure that we saw on upward pressure on the housing prices.
Yes.
There was simply a lack of available inventory. But as we look out in the next 2 years or so, 2 to 3 years max, we're going to see a fair amount of inventory come on stream.
Yeah. And
So
there's-
yes, Mike, we're still seeing people move from the GTA, that family that you talked about, or that young couple perhaps that we talked about, or maybe folks who are downsizing and looking towards retirement, who find themselves priced out of the GTA.
Yes.
Maybe we're a bit of an extension of that now, and they're going to look here. So you're going to
sure we
see
are,
you're going to see some people who are coming into Barrie to buy up this new inventory, but you're also going to see people from Barrie buying in Barrie
Yes.
with new available
Well,
inventory.
and with the new multi-unit housing, it's a lifestyle change in many regards. The attraction and need for the detached home with the big backyard and the big front yard is shifting with an aging population, and not just the aging population, the younger population is not as attracted to that big property. Their first thought when I'm taking people out showing them homes is, it used to be, wow, look at the size of this yard.
So
This
let me
is great."
catch you on this.
They don't want to spend their Saturdays and Sundays, nor can they afford the time to spend their Saturdays and Sundays cleaning gutters and cutting grass and tending
Traditional, what was wanted a few years ago,
Our
maybe a couple
generation,
days
our
ago,
parents'
our generation
generation.
is not what our younger generation or the new
Yeah.
up and coming generation is wanting. The topic has been out there a few times. It says, what would you give up first, your car or your cell phone? And they're
Yeah.
like, give up my cell phone? Are you crazy? I'll never give that
Yeah.
up. I'll give up a car. So there's ride sharing, there's car sharing. People who are looking to live somewhere near mass transit. The Go is obviously coming online with all-day train service as well. They've recently announced that. So yeah, you're absolutely right. Lifestyle does not necessarily mean white picket fence, large detached home on a large plot of
Yes.
land. Lifestyle can mean I want to be able to lock my door and have someone else take care of it while I go on vacation. Or I'm a commuter, I want to come home, I want to put my feet up, or whatever it may be. Recreation, the gym membership, what amenities are included as part of the development that I live in are part of lifestyle. So I think that's changing a little bit. And I said this before a few times over the past number since September, I guess. Watch out for what the demands are. If you look to Europe or you look to Asia, what we're seeing here, it's not that we're behind, it's not that, well, we're Canadian, we should be different. These are trends that are
Yes.
catching on.
And it's our time now.
It's our
Yeah.
time. So we only have a couple minutes left. What I wanted to do is I just wanted to pick up, I've got an article for people who are looking at what these changes are. And by the way, you asked, I think you're coming up for renewal on your mortgage or to refinance.
Yeah.
I actually put myself last. It's something I do a lot of the time. I was helping my clients out over the Christmas break and I realized I forgot, oh shoot, I'm moving next week.
Yes.
Like in a week from today, I'm moving.
Yes.
And I didn't have my
Congratulations.
finances in place because, I'm looking out for my clients. So a couple things to take in mind. I'm reading an article. This was just after the Superintendent of Financial Services released their information on qualifications and those
Yes.
stress tests that we talked about. Well, there's an article in the Globe and Mail from October 17th that says critics
My
say
birthday.
that happy birthday belated. Critics say new mortgage rules will push borrowers to unregulated lenders. One of the things that we heard about was also a use of the term called shadow lenders, and it's
Yes.
spooky. shadow lenders, it sounds like it's something that happens in an alleyway behind a building or something like
Cloak and
that.
dagger stuff.
There's another one here, and we'll post those later. Another one, again, on the October 11th, it says, the superintendent's proposed mortgage stress test is unnecessary and harmful. That's also in the Globe. That's an opinion. And then how OFC's new mortgage rules will affect home affordability. That's where people were really talking about your buying power, your dollars down 20% today versus a couple of,
and without a
weeks
doubt,
ago.
between that and the increase in prices, it has raised the bar beyond what some people would be able to afford. Without a doubt, which is not indefinite. I mean, and that's something you and I, we plan to do some seminars this year. There's some work to do before buying a house. A lot more work and a lot more preparation than there ever was in the past, or ever was for our generation or our parents' generation. But nonetheless, there is still means to get into a home.
So here's how we're going to wrap up, Mike.
Here's
how we're going to be able to wrap up. First and foremost, Joe is going to help us out by posting some of these articles for us that people can read. One that I think, though, for balance should be read is that the superintendent has published a white paper or an article that says this is why we're doing what we're doing.
Yes.
We want to curb the household spending. We want to make it just put a little bit of moderating pressure on house prices, and we want to make sure that people can stay in their homes.
Yeah.
Do I agree with it all? Not necessarily. Is it our reality? Absolutely. One thing is important, though, folks. Please know this. Not all lenders are equal.
No.
These rules don't apply to all lenders. One thing you'll know for sure, the green bank will never send you across the street to the red bank telling you that they've got a better deal. There are 300 lenders in Ontario. They all offer something a little bit different. And the credit unions are not regulated the same as the other federally regulated institutions.
Something I learned in my renewal process was I don't have to do the same.
The A lenders, the A minus lenders, the B lenders, they have all sorts of different names. Don't get confused by what we're being called.
Or intimidated.
Or intimidated. Different lenders have different sets of regulations that they're required to follow. The best thing that I can tell anybody is sit down with someone you trust who's licensed in the mortgage business. Tell them what your scenario is. There will always be a way to work with people to make sure that they can fit and find something that'll work for them. It might take a little bit more homework. We might have to pay a little bit more attention today. But this shadow lender is not some back alley payday loan.
And shop around.
I have to cut us off, but we are going to have a lender come on with us who is an alternative lender who will tell us a little bit more about that. I thank you all for joining us, and we can't wait to see you again next week.
Also going to have the mayor back for a future show in the next couple of weeks. And
see you in a week. Thanks to our producers as well.